To be honest, a lot of it's in the existing stocks that we already own. And again, going back to last time we talked, we would have highlighted that if we're correct in our long-term thesis, these opportunities won't die after 12 or 18 months. They typically take 3 to 5 year minimum to play out. So the banking recovery around the world post the GFC crisis, the US is probably well extended, but Europe is only just entering that period where they're starting to pay dividends. So it's still very early years. So we still see good risk-reward opportunities there. The property cycle, for example, in Spain is only just starting to really emerge from the trough. Our positions in whether it's Google or our exchanges, things of that nature, which we just see as these sort of consistent growers. Visa, we just want to lock away for quite some time. So the reality is we're pretty happy with what we owned, recognising that they'd done well short term, but valuations were still okay, good earnings growth, and to a certain extent we got a little bit lucky in that with Greece, some of these stocks just kind of came back a little bit on the nervousness around that. So it gave us the opportunity just to put the cash to work and kind of hold our percentage positions in the fund. So there's not a lot of new things going in the portfolio at the moment. We've got a few things we're working on, but at the moment we're kind of pretty happy just with what we've got. As I say, it's exactly what happened in the US. 2 steps forward, 1 step back. Every time there's a bit of noise around Greece or something, people get nervous. But the reality is, if you look at the underlying trends, you're starting to see sort of positive momentum. And the reality is, it started 2 or 3 years ago. Germany was the first to recover because it's a strong economy, but then you had Ireland, and that's now growing very strongly. And if you look at all the economic statistics or listen to the companies and what they're saying, I mean, Spain at the moment now is also saying good numbers coming through. And we're also seeing progress in Italy. And people have to remember too that you've not only had this process of adjustment and labour reform and things of that nature, but Europe's also benefiting lower oil price, lower euro. So it's a lot of stimulation in addition to what they're doing with QE. So it's inevitable that would come through the system, and it's playing out exactly as you would have expected. And to be honest, the Greeks were pretty silly because we'd just come back from there in April, and the reality was at the start of this year you were getting the green shoots in Greece as well, and it was just starting to show some signs of growth, and then they elected the new government and it all kind of went backwards again. So everything seems to be pretty consistent with that 2 steps forward, 1 step back, slowly increasing momentum. And that's why I think the earnings will probably be a bit better than people expect over the next 2 or 3 years.